Financial statement analysis. It consists of 5 steps. First, financial statements. I hope you all remember what are financial statements, that are balance sheet, income statement, and statement of cash flow. A possible framework for analysis is basically the detailed framework, the detailed analysis through which we can analyze financial statements of a company. Ratio analysis are basically financial ratios and financial formulas which are applied on a firm to find out financial position or profitability position of a company. Trend analysis shows whether the company is moving upward in profitability or company is moving downward towards loss position. Common size and index analysis are basically the analysis which are applied on financial statements to find out whether the company is increasing horizontally or company is increasing vertically or company market share is increasing or decreasing. We will study all these things one by one in next chapters as well. We are studying this in 4 chapters. It will continue with chapter number 5. It is about financial ratios usage. Then we will continue this thing to chapter number 6, which is about profitability ratio usage. Starting with example external uses of statement analysis. Who uses uh, financial statements of a company for analysis? In financial accounting, when we were studying in your second semester of BBA, we used to study that financial accounting is used for internal usage of the company. Accounting information used in internal usage. And who are the internal usage of that financial statements, financial information? That are customers, that are employees, that are top management, mid management, and higher management, right? But there are external uses of that customer. Who are there are external uses of that statements who analyze financial statements for their own understanding or for doing investment or not. Those are trade traders, bondholder, shareholder, retailer, supplier, and all other things. Like people think while doing business with some company or a firm through these financial statements. If the financial statements are giving a financial position in a upward trend, profitability trend, then definitely all people want to do business with you and people want to invest money there with you. But if your business is going downwards and it is moving in loss, the company is moving towards loss, no one will be ready to do business with you. Like if I ask you all to go for investment or buying shares of Nestle company or any other multinational company or Pepsi, Coca-Cola, Google, Toyota, you will go and blindly buy the share. Why? You all know that multinational companies never give, you can say, doka to their customer and never betray them. They give positive feedbacks and they are true in their spirits in dealing with customers. So their market share increasing, their market shareholder price increasing, the shareholder overall firm's value increase. So people do investment happily in these multinational companies. But if I say and go and buy shares of Ghazi Tractor, Pakistani company, or if I go and say that buy shares of any other company of third world countries of Sri Lanka, India, Bangladesh, maybe you will think that, sir, why we should invest in such a poor company? Why should we not invest in MNC, multinational company? So this is a basic difference of the brand name. This is a basic difference of the financial position of the company or the market share of the company. So these chapters, which are very important after time wheel of money chapter, very important financial management and your whole life. Secondly, this chapter will study financial statement analysis. After this, we will study chapter number 5, that's about financial ratios usage. Then we will study chapter number 6, that's the profitability ratio usage. These are crux of a company, of financial positions of any organization or corporate sector working there. Why? Because these crux show you whether your company is going to make more profit or your company is going to make more loss. Okay, coming back to slides, example external usage of statement analysis, trade creditors. Who are trade creditors? Trade creditors are focused on liquidity of the firm. Trade creditors are those customers who do trading on daily basis with your company, like who buy products of your company on credit and then pay you when they sell that products. Who are retailer, who are supplier, who deals with the supply chain of all your products from company to the market and from market to the customer. So these are known as trade creditors who buy and sell your products and who supply you with goods and who help you in selling your products from company to the market and then from market to the customer. They focus on liquidity of the firm. If liquidity means company in cash, company assets can convert how fast into cash form. So if the company assets can convert very fast into cash form, definitely they will think in doing investment. But if the company assets are strong and they need a lot of time in going for liquidity, they will definitely do investment that the company is big enough and strong enough to survive the market jerks and economic jerks. So people used to do investment this type of thing. So trade creditors analyze your statement, and they are external user, and they specifically focus on liquidity of the firm. Bondholders. Bondholders are those who focus on long-term cash flow of the firm. Long-term cash flow of the firm. Bondholders basically companies issue corporate bonds. Company issue zero bonds. Company issue maturity bonds. Company issue zero coupon bond, non-coupon bond. This type of bonds are issued by a company which people used to buy, and their life is more than 5 years. So they are long-term customer, and this customer focus more on cash flow. How much cash is coming to the company? How much cash is going out of the company? If the cash flow into the company is higher, they do investment, and they are happy to keep relationship with the company. If the cash flow is low, and incoming cash flow is high, they will do investment, they will keep strong relationship with these bondholders. But if out cash flow is high and in cash flow is low, they will walk away from the company. Third is shareholders. Shareholders are those people who buy shares of the company. They focus on profitability and long-term health of the firm. Now, when we talk about the health of the firm, it's not about the physical, it's about the financial health of the firm. Like if the company is making profit, well and good, the shareholder will buy your share and will be ask others to buy as well. But if the company profitability is not very well, and but the health of the company, financial position of the company is strong, even then the shareholder will keep share. But if the health of the company, financial health of the company is poor, if the profitability of the company is poor, these shareholders will not buy your share and they will sell the shares of the company. So these three are the main basic external usage of financial statements of the company, who decide about the financial position of the company in keeping relationship with the company or not keeping relationship with the, which is here. Missing one thing about balance sheet income statement. There is statement of cash flow. Statement of cash flow is that statement. You all know that how much cash is coming to the company, how much cash is going out of the company. So a specific date of that cash flow mentioned. It can be daily, it can be weekly, it can be monthly, it can be year wise. So these three are basic financial statement, and the most important one: balance sheet, income statement, and statement of cash flow. Framework for financial analysis. There are two type of uh, financial analysis in this case, where we talk about a framework. First, analysis of funds need to of the firm. You need to analyze the firm's needs of the firm. What funds are required by the firm for that specific period, or for that specific accounting period or cash period. Two processes are done for that framework. First is trend or seasonal component. Second is analytical tool used. Trend or seasonal component: how much funding will be required in the future? Is there a seasonal component or not? First, you need to see the firm or company which is opened. It's not operating for only seasonal product selling, but it's operating for long-term product selling. Like if we talk about seasonal business, there are three basic seasons business which you all know. First, like if you talk about X business is that is which is season business, which mostly eaten in winter season than in summer season. It doesn't mean that in summer season people don't eat egg or use egg. People use and eat egg, but in low quantity than in winter season. Same if you talk about the cold drinks. Cold drinks are taken mostly in summer season than in winter season. In winter season, people use but in very low quantity, and then in summer season. So they are seasonal products. Then, if we talk about the fruits, fruits is the business. Fruits business is that business in which season is involved. Like in summer season, we eat grapes, we eat lychee, we eat mangoes, we eat multiple other peach and this type of products. But in winter, we eat uh, oranges, we eat you can say sugar canes, we eat this type of fruits which are. And so if your company is operating in such business which are dealing with such fruits or vegetables or eggs or beverages or cold drinks or ice cream or such type of product, then you need to find how much funding you need to run that business on season basis. Same we talk about the ice factories. Ice factories are not lifetime businesses; they are seasonal businesses. In 3 4 months, 5 months, and nowadays Pakistan when summer is very long, so 6 months summer season, 6 to 7 months summer season. People use ice factories and open ice factory and run ice factory business, but after that season it is closed. It means that is out of seasonal work. So for seasonal company, you need to analyze how much funds you required for running that business on season basis. But if you are doing that business, if you are doing that financial analysis for long term period, then you will not look into the short term financing needs. You look into long term financing needs. I hope you know. Remember the short term, long term, and mid term definition. Short term, when you talk about short term, it means less than 1 year. When we talk about mid-term, it means 1 to 3 years. When we talk about long term, it means more than 3 years up to 20 years. So short terms and mid terms, short terms investments is mostly fund financial analysis of the statements is mostly for seasonal businesses, and mid term is for small setups which deals to all type of businesses. And when we talk about long term, it's a multinational company or large corporation or large company or large government entity through which financial whose financial needs to be analyzed. Analytical tools used source and use statements of cash flow and cash budgets. What are analytical tools used for even season components, season companies, even long-term companies, even mid-term companies? First, you need to analyze financial statement. Balance sheet will show you how much assets you have, how much liabilities you have, how much only equity you have. Income statement will show you how much expense you have, how much revenue you have. Statement of cash flow will show you how much cash is coming to the company, how much cash is going out of the company. And cash budgets will show it is defined as keeping everything on track, keeping everything according to plan. If your financial plan is met, it means your budget is met. So according to the limits, according to the amounts allocated, and the plan according to allocated amount allocated in the financial plan, and you follow that financial plan, and you don't cross your limits, it's known as following your cash budgets limits. So all the financial statements analysis and cash budgets analysis help you in doing analytical framework analysis of financial statement in long term and mid term businesses. Then we talk about analysis of then moving ahead, the third point, that is about analysis of business risk of the firm. This risk is very important. There is a risk exist which is a market, but the market risk which is we known is market risk, which we known is known as beta. In finance, there are two types of risk. First is systematic risk, then is unsystematic risk. Systematic risk is that risk which exists within the system, within the company, within the organization. And unsystematic is market risk, which is uncontrollable, which is unbearable, which is unavoidable, and this exists in the market all the way. Business risk related to risk inherent in the operation of the firm. For example, volatility in sales, volatility in cost, proximity to break-even point. What a business risk is, your business can go up, your business can go down through your economic condition of the country. Like if you talk about coronavirus attack in the world in Pakistan, all the big business in the world have been badly affected by coronavirus attack. Mostly airline business are closed, mostly oil factory business are closed, mostly school colleges business are closed, mostly those businesses which were linked directly with traveling or caring or education or this type of things have badly affected. And this business risk is not due to bad business management, this is not due to bad financial management, but this is due to coronavirus attack on the physical attack on the people working in organization and on the governments and the economies of the world. It's not only Pakistan fault, but it's all over the world. Economies are going down, economies are going bad. So businesses are slowly gradually closing. An example of this business risks are volatility. Volatility means fast up and down in sales. Volatility in cost means fast up and down in cost. And proximity to break-even point. Break-even point is a point at which business is not giving profit nor it giving loss. Business operating at no profit. So break-even point is known as no profit, no loss point of the business. These three are basic things to judge business risk in financial statement analysis. I hope you all are clear. After discussing these three framework, analysis of funds needs of the firm, analysis of financial condition profitability of the firm, analysis of business risk of the firm, we determine the financing needs of the firm. A financial manager must consider all three jointly when determining the financing needs of the firm. Being a finance manager, you all will be finance manager in the future in all the capacity, whether you are doing HR, marketing, or finance, or engineering, or technical side, or any sort of business or job, or going abroad, or working at home, or sitting at home. Even then, you need to do financial management. Uh, you need to consider these three types of business when you are doing business or you are finance manager of the company. Short-term financial needs, mid-term financial needs, long-term financial needs. What is the profitability of the company? What is the business risk of the company? And how your business financial needs can be accomplished, how your financial needs can be increased. This type of planning you need to do when you are doing framework for financial analysis and determining the firm's financing needs. Then you will be able to make your company run for long-term business and not for short-term or for seasonal demand. Negotiation with supplier of the capital. very important point for financial management. You need to negotiate with the supplier of the capital. Here we are talking about supplier, but it's not about only supplier, it's about retailer, it's about every other business, every other thing linked with your business. I mean, will say simply all the stakeholders who are linked with your businesses, who are linked with your company. Being a finance manager, you need to negotiate on all the deals. On the financial transaction, you need to take discount. You need to negotiate your price. You need to negotiate supplier's price. You need to negotiate raw material price. You need to negotiate discount price to retailers, shopkeepers. You need to discount salaries. You need to discount many other things which are involved. In which thing money is involved of your company. You being a finance manager need to negotiate or decrease that usage with the that people in the company. Let's have a look at balance sheet. This Bhaskar Wonder company, whose balance sheet of 31st December 2019, it's a quartz watch company. If you see, we have cash and cash of $90, account receivable 394, inventory 694, prepaid expense 5, accumulated tax. We get current assets 1195. Then we have fixed asset cost. Then we have uh, accounting accrued depreciation, and at the end we get $2,169 as total assets. Look at further, we have notes payable, we have account payable, we have accrued taxes, we have current liability of $500. So long-term debt is about $530. Shareholders equity, we have to pay that common stock $1 per additional paid in capital, retained earning, all those things. So we have to pay 2,169 as total liability of current liabilities and total equity owners. Now let's have a look at this basic example, right? Don't get confused at the moment. We are giving you just example of the balance sheet and income statement. Now coming to the Quartz Watch income statement of December 31, 2019. Net sales are mentioned, cost of goods CGS, cost of goods is mentioned, gross profit, then admin expenses, earning before income taxes, income interest expense debit, then taxes, income tax are debit, interest expense is debit, then interest expense, income expenses are income tax is debited, then dividend are debited, and finally you get increase in retained earning, that's about $53. This income. Thank you very much. That's all for today. For this week class, you can read and listen to all slides, and then you can ask question in Google Classroom or Financial Management. I will reply that. Please go through slides. Please take these studies, online studies seriously. We are having exam after 15th of August, inshallah.